Today, the topic is about market turnaround and stock rebound. During the months of February to early March this year, the Dow fell about 2,000 points to around 6,500. And on March the 10th, suddenly it rose for 4 days straight. Now it makes people think, is this a turning point? After more than a month of doom and gloom? There are reasons for this sudden turnaround because of the following news. First of all, Citigroup has announced that during the first 2 months of this year, it has made profit after months and months of losses. And it also says that it may not require any more of the government bailout. 1 day or two after Citigroup's announcement, JP Chase and Bank of America also made the same announcement. And then we have General Motors also came out to say that they may not need the government bailout for the present time because they have succeeded in saving some cost due to their own restructuring. And the chairman of the Federal Reserve also said in an interview that the US recession may end later this year. We also look at the bond market, and there is indication that the bond market is becoming more active. That suggests that the credit situation is beginning to ease. Banks are starting to lend again. Despite the good news, I want to put forward some caution. This kind of situation, the banks are turning a profit, have to last for several more months before we can be sure that there is a real turning point. Another question is how much toxic assets still remain in the banking system and how long will it take to flush them out. A third thing to worry about is the recent job losses. When unemployment rises, there's bound to be more mortgage foreclosures. And when there are mortgage foreclosures, the banks will be forced to write down more assets. And to write down more assets, they cannot lend that much. I wish to point out to you that there is one very important point that you cannot ignore. The fact that there is a lead time for the stock market. The stock market always leads the real economic situation by at least 6 months and usually more. Why? Why the stock market leads? Well, I always talked about it because of insider information. I can show you one good example. In this current financial meltdown, the bank stocks already started falling since January 2007, before the financial meltdown became public news on the front page in the summer of 2008. I'll give you some figures. Citigroup in January 2007, it was around $50, and around the summer of 2008, slowly coming down to the 20s, and then finally down to $1 just last month. Bank of America, the same kind of decline, 50s down to the 30s, and then to about $3 during the same period. JP Morgan, 50s down to 40s, and then down to about 15. Another fact that I also want to mention, which is very important, this is about the typical up and down cycle of a stock. Most of the stocks go through this kind of cycle. I can show you that there are about 5 different price levels, P1, 2, 3, 4, 5. And I give you the numbers just to illustrate how crazy the range could be. So P1, $70, P3, 4, and 5. These are just examples, they are not real. First of all, I want you to look at these two levels, P2 level and P4 level. The P2 level represents the realistic market high, P4 realistic market low. And the public, of course, doesn't know much about it. It's only the judgment by the big guys, how they act. But the public usually know about it around P3 in the middle. This is called the public awareness level, because they see the price is going up. They see it in the papers, and they heard it from the news and all the experts talking about the price of the stock. And there is a very unrealistic level at the very high price. This is what I call the public euphoria level. It's not real. This is where the big guys start short selling. Only fools rush into this level. And opposite to this, we have the unrealistic level, P5, where the stock becomes oversold. And this is where the big guys quietly come in to buy up all the things that the small guys sell at a panic. And between the realistic levels, P2 and P4, at this level, the realistic market low, this is where the big guys begin to push up the price, because they have already bought quite a lot, quite enough at a lower price here. And starting from here, they start to push it up to let the public know about it, because they want to get public participation. In other words, they want to get their money. And when the stock reaches the realistic market high, the big guys begin unloading. So my conclusion is that the market turned around on March the 10th of 2009 may be true because of three very important facts. Number one, the lead time I just talked about. Number two, you look at the current recession, which began officially in January 2008. If this recession is ending in late 2009, as suggested by the chairman of the Federal Reserve, it would be the longest recession since the Depression of the 1930s. The turnaround may be true, is that turnaround used to follow a period of gloom and doom. And this has been the period in February and early March.